Now, unfortunately, from time to time, we run into clients that we file a tax return for them and they end up owing money on that return, but they don't have the money to pay the IRS for the tax. That's an unfortunate situation, but there is a solution. The solution is an installment agreement where you can pay the IRS over time. There are a couple of hurdles to an installment agreement. It depends on how much money you owe the IRS. If you owe the IRS more than $50,000, they're going to require you to fill out some very lengthy forms and basically disclose all of your assets, all of your liabilities, equity, everything you basically own to the IRS in this form so that they can determine what you have. They can put liens and levies on your property, do all that sort of stuff. And so if you can avoid owing the IRS more than $50,000, you'll be better off. If you owe them less than $50,000, you don't have to go through all those forms and things. You can simply go on the IRS website. Once the IRS has processed the return, they're going to have your balance due posted in your account. Now, it takes the IRS probably a week or two at least to process the return and put the balance in your account. Sometimes we prepare a tax return for clients and we get it filed, and then the client will immediately email us that day or the next day and say, hey, I don't see this balance due in my account. Well, the IRS doesn't work that fast. Even though we e-file a return now, it still goes into the IRS, and it takes the IRS systems at least a couple weeks to process that and then show that balance due in the account. Once you log into your IRS account and see that balance due, there is then options inside that account to set up an installment agreement directly inside that account. And again, if the balance due is under $50,000, then it's very simple and easy to do it inside that account. If you don't have an IRS account, I would encourage you to set up one. It's much easier to do it that way. If you just don't want to set up an IRS account, then you can wait for a bill to come from the IRS. The IRS will send you a bill for the tax due. Inside that bill will be instructions for setting up an installment agreement. There's a form that you can fill out and send in to the IRS and take care of the installment agreement that way. And so those are kind of the steps and ways to resolve a tax due notice. Now, there will continue to be penalties and interest that are accrued on that. So even though you owe even though you're making payments to the IRS still charges penalties and interest on that. They'll charge you a failure to pay penalty as well as interest on those amounts. So it's better to try to pay those balances off as quickly as possible. And the IRS has a lot of power if you don't pay them, or if something happens with that installment agreement. We'll cover kind of the IRS power in a different video here, but when it comes down to it, the IRS is typically the worst institution in the world to owe money to because of the powers that they have. So I would encourage you to try to pay that off as quickly as you can. And if you're looking for more tax tips, then make sure to hit the subscribe button and go to taxtutor.com and subscribe to our weekly newsletter.